Thanks, Tremblay. Well, hello, welcome to the second trading day of July. Let's get to the top stories that set your agenda now, starting with oil prices. We see a little change today, holding near the 2-month highs reached in the previous session on expectations for rising fuel demand from the summer travel season and possible U.S. interest rate cuts that could boost economic growth. We see Brent crude there's trading $86.82, breaching that $85 mark, up 0.25%, continuing the rise we saw from yesterday. WTI, that's the U.S. grade, that's $83, moving farther away and farther higher from the $80 psychological level, 0.14%. So we're seeing strength there with prices in the oil market. Let's get a check on the FX market now. See the NAFEX that depreciated by 27 naira 42 kobo to fix at 1,515 naira. So from a big gain on Friday, that was the last trading day of June, we see a big drop, 1.84%. That's for NAFEX. For NAFEM, 1,508 naira. That was a close from previous close of 1,510 naira. So we'll see a gain there, 0.23%. Let's get a check on money now. Nigeria's money supply, also known as M3, has climbed to a new peak of 99.24 trillion naira in May, up from 96.97 trillion naira level recorded in April this year. That's according to latest money and credit statistics data from the Central Bank of Nigeria. The amount, which comes after a slight decline in March, indicates a 2% increase on a month-to-month and 78% jump from 55.69 trillion naira recorded in the same period last year. The new increase in money supply also comes in the face of the CBN Monetary Policy Committee's stringent measures aimed at controlling inflation. I'll see the acting director of other financial institutions department at the central bank, Mr. Arugundade Abayomi, is seeking the cooperation of member countries in the West African Monetary Zone in ensuring better regulation of the fintech ecosystem. Mr. Abayomi, who was representing the central bank governor at a meeting in Abuja, says effective regulation of the subsector will help prevent money laundering. Take a listen.
It's the 10th meeting of the College of Supervisors for Non-Bank Financial Institutions of the West African Monetary Zone.
So, Deputy Director, thank you.
Participants are drawn from Ghana, the Gambia, Guinea, Liberia, Nigeria, and Sierra Leone. They are reminded to continue the monitoring of policy actions and spillovers to ensure that the financial system is resilient.
In the current economic landscape, our sub-region faces several challenges, including inflation pressures, currency fluctuations, and post-pandemic recovery efforts. These challenges underscores the need for coordinated policy responses and enhanced regional cooperation to ensure economic stability and growth across the sub-region.
Emerging risks to the financial system include climate-related risk, internet disruption, cyber and social media threats arising from digitizations of financial services to strengthen the resilience of the financial sector. Member states should develop an adequate national cyber security strategy and appropriate regulatory and supervisory framework.
The Central Bank Governor, Mr. Olayemi Cardoso, who is represented by the Acting Director of Other Financial Institutions Department of the bank, wants all WAMSI countries to beam their searchlights on the fintech market for better contribution to member countries' economy.
We reiterate the importance of monitoring trends, risks, and innovation of MPFIs, OFIs as their increasing transaction volume pose major financial system stability risk. Fintech loans is one of the most commonly reported innovation. While overall this may appear small in relation to the size of credit granted by the DMDs,
members of the West African Monetary Zone have announced that they are intensifying their monitoring efforts to improve policy coordination and achieve significant economic growth.
Thank you very much, sir. Thank you.
Sarah Chimugu, Channels Television News.
All right, now to our first conversation. We see inflation numbers for May. That show a rise of 33.95%. But digging deeper into the contribution of items at the divisional level, we see health contribution year on year to these inflation numbers, 1.02% jump there for May. Health contribution also for the month-to-month level, I would say about 0.08%. So we're seeing a rise there with contribution of health into the headline inflation that we have. All right, let's chart the way forward now with Dr. Enna Taishes, the CEO and founder, Get Medco, joining us from our Abuja studio. Great to have you. Good morning.
Good morning. Thank you so much for having me.
So talk to me about how you see Nigeria's healthcare sector, at this time, and your thoughts on how we got here. We see how much people are spending for pharmaceuticals at this point.
Yes, let's just say it like this. There is a way forward, and there are significant improvements happening even as we speak. Unfortunately, we're way behind the 8 ball, and there's a lot of catching up to do. So when I look at the Nigerian healthcare sector, there are 5 issues that I think are prevalent that need to be addressed. One is, and I coined the term TRACE, the acronym TRACE, which stands for training, retention, accountability, consequences, as well as equity. So the A is also for access as well. And I think that these 5 things are really the pillars on which the recovery should stand. We need to train our physicians better so that they can even be up to world standard. There are a lot of gaps. Even as far as retraining them, having them do exams and making sure everybody is up to date, retaining our physicians. We know that that's a big issue because many of our doctors are leaving for greener pastures, as it were, in other countries. So these are the major issues that I believe are afflicting our system at this time. And inflation is huge. Unfortunately, that's as a result of our economy. So now drugs are much more expensive, and you can imagine those who have to take chronic medications for diabetes, hypertension, what they have to pay now. Those who are on dialysis, how much they have to pay for each session. It's really a big issue, and I'm hoping that with the coming changes, that these can be improved.
Right, and definitely, talking about the prices of pharmaceuticals at this time, we see the federal government making some moves right now with an executive order slashing taxes on pharma inputs. What do you think would be the immediate impact of this?
Well, I think apart from slashing taxes, we need to make sure that there's a follow-through in the reduction of the cost of these medications, especially to those who are not able to afford the medicines. So, for example, in the U.S., we have subsidies. So the government provides subsidies so that the medications are not as expensive. And I think that this is so important for the government to say, apart from slashing taxes, how can we inject the system so that we have less financial burden to get these medications? All right, and also, the other side effect, I'm sorry to interrupt you, the other side effect is that people will start going to other routes to get medications that may not be the right medicines or that may not be verified by the Drug Association. Right,
because we see some people having to fall back to agbo, at this time, because
exactly.
We see how much these medicines are. But talk to me about medical tourism now, still a burning issue right now. But with currency volatility, how would you describe the rate of medical tourism to and outside Nigeria, at this time?
Yes. Nigerian doctors make up over 10% of Black doctors worldwide. That's a huge percentage. And, now in the UK and Canada especially, there's a huge dearth of physicians. So what they're doing is they're coming to Nigeria to say, let's get all these doctors into our country so that they can, help us with our healthcare situation, because they also have a numbers situation there as well. So they're, beckoning to these doctors and they're telling them, hey, we'll give you housing. You can bring your family. You can even bring a nanny. You can bring whatever you want and we'll provide all these things for you. And it's hard to compete because when you look at the salaries, when you look at the infrastructure, you know, these are the two things that are bringing that are making the doctors decide to leave Nigeria. So we do have to look at our compensation structure because it does not compare to our counterparts in other parts of the world. And so it's hard when you now have an open door where there's no immigration issue to choose to stay here when you have to provide for your family and you have to make a better life for yourself. So I think that we do have to take a hard look at the physician salaries, at the healthcare salaries in general, and really pay more attention and more respect to these important institutions.
All right, let's look at the investment in the sector at this time. We've seen the central bank MPC, they've moved to tackle inflation with interest rate hikes, increasing the cost of credit at this time. What would you like to see, going forward, can boost healthcare, the healthcare industry? You're talking about investments, FDI, at this time.
I think that we have to find a way to incentivize people who want to invest in the healthcare sector, meaning that, they should be guaranteed a higher rate of returns. You already mentioned it earlier, the tax implications, all these things. I think, once you reduce the red tape, as it were, to these institutions, you will get an increased influx into this and also guaranteeing some level of returns. Healthcare is a big booming business right now. Even the number of, diaspora physicians returning home. It's really impressive. People do want to come home, but what they want to ensure that there's infrastructure. So I think infrastructure is a huge opportunity for investors. I also think that hospitals and satellite centers so that people can get care, have access to care wherever they may be. I think it's really, really important. So I would say, however, we can reduce the bureaucracy for investors to come in, particularly for healthcare. I think the government should look into that.
All right, what about personalized healthcare? Talk to me about what kind of solutions this is actually bringing.
Mm-hmm. Thank you. So personalized healthcare, let's start with a definition. It's really a style of medicine or an art of medicine which improves significantly the patient experience as well as physician outcomes. It's basically physicians saying, I'm not going to treat you as one of many. I'm going to treat you as one of one. I'm going to listen to you. I'm going to hear you out, as opposed to a lot of times the paternalistic approach that a lot of physicians have. Now it involves you sitting down at eye level with the patient, you listening to them, you looking at their entire situation, their socioeconomic status. Can they actually afford the medication that I'm recommending? Can they actually afford the hospitalization that I'm suggesting, or the surgery or the procedure? So it's really looking at the totality of the patient, looking at their whole personal outlay and saying, how best can I support you with this condition that you have? And really what it does is it gives the patients agency. And because they have that agency, they're more involved in their healthcare. And then we see dramatic improvements in their outcomes, in their numbers. So blood pressure, diabetes, even cancer outcomes and so on, because they feel like they were given some level of control over their health. So that's really what we're trying to push at GetMedCo, that with every client that we have, you will have that personalized care. We won't treat you like, oh, just the next patient that walked in. We want to know everything about you. We want to know your fears. We want to know your concerns. We want to know, what do you think about, what concerns you the most about what's going on right now? And I think that if you treat each patient like this, and this is really just an extra 5 minutes in your visit, if we do this, if we make this investment, we'll see a dramatic improvement in healthcare outcomes.
Talk to me about your outlook for Nigeria's healthcare industry, at this time, seeing all the challenges we have at this time and seeing how the federal government is trying to help boost this industry at this time. What are you seeing in the future for Nigeria?
So what I see it's going to be a long road. I see it's going to be a long road, but it's not an impossible road, and it's not a hopeless road. The unfortunate situation is we are reacting now. I wish that some of these changes that are taking place now happen before the massive exodus of physicians. So now there has to be a significant pull to bring diaspora physicians back, and also to increase the number of physicians, the number of prospective physicians in our schools. We also have to bring diaspora physicians and educators back so that we make sure that the education that these new doctors are receiving is up to par and up to world standard. So I do think that, Nigeria is headed in the right direction, but it cannot be one thing at a time. We have to have, like I said, we have to address these 5 different pillars so that we're moving forward together. And, in the next 5 years, we will see a dramatic increase. There was a time that Nigeria was on par with the Western world in terms of medical care and medical education. And I believe that we can get back there. And we need to be able to attract our physicians abroad to come back and, give a month, give 2 months in the year. And if the more physicians that we have, the more that we can do this. And I know a bunch of my colleagues who are willing to come back. We have a lot of Nigerian physicians who are happy to come back home, not permanently yet, but at least for a time period so that they can help.
All right. Come back home this time. Thank you so much. It was great having you, Dr. Enna Taichen.
Yes, thank you so much.
Founder, Get Medco. Thank you so much.
Thank you for having me.
All right, we'll take a break now. When we come back, we head straight to the commodities market. That's in a moment. Just stay with us. All right, let's head straight to the commodities market now. We have Dumebi Oluwole joining us right here in the studio. Great to have you, Dumebi.
Thank you so much, Laddie. Good morning.
Yeah, so much data upon us yesterday from the MBS. And one is in capital importation.
Yes.
And that rose by 210%. That's good news.
I mean, it is. It is. I don't want to be a Debbie Downer,
right.
but yeah, it's good news to see that, we're seeing some, inflow of capital into the country. A very important thing to actually notice is the type of investments that we're actually getting. And primarily, it was an increase in hot money, foreign portfolio investment.
Hot money again.
Yes. So, and a very good thing, a very good pointer to the fact that this was actually going to increase is the fact that from the NGX's reports, weekly reports, or even monthly reports on foreign portfolio investments into the stock exchange, you see that it had been increasing over time. The level of inflows versus outflows was just up until, I think, I would say May. I think, between April and May, we saw like the outflows becoming more than the inflows, and that's just very evident of one of the things that happened between those months. But regardless, we've seen an uptick in foreign portfolio investments into the country, and a very good reason for that is the structural reforms. We've seen Fitch, Moody's, and even the IMF come out to somewhat commend the federal government and the CBN for the recent changes that they've made to Nigeria's monetary policy structure, really. And a very good thing that has happened, even though we're still seeing the returns on investment, still negative, but because interest rates have increased substantially compared to last year and even 2 years ago, we've seen that the gap has narrowed with inflation somewhat, and investors are a bit more bullish on some of the securities and investment options that they have in Nigeria today. So, but primarily as an economist, I cannot help but mention the fact that we do need more stable type of investments coming into the country. Hot money is good, yes, but if we do get more of foreign direct investment in terms of businesses staying in, more capital, the longer term effect of that, or the ripple effect on the economy, is more substantial in terms of productivity and job creation. And that's primarily what Nigeria needs today. And unfortunately, unfortunately, I would say that somewhat sits on the table of fiscal authorities. I remember the last time I came, I was very, I was very hard on the fact that we do need to see more complementary moves from the fiscal authorities to support what the monetary policy authorities are doing. A very good thing that has happened so far is, I think just this week, and it started off, I think yesterday, is the fact that the CBN is trying to ensure that, the forex market is more cohesive cohesive. There's a lot more reduced bottlenecks. I think they removed the price verification system to ensure that form M procedures for traders are a lot more seamless. So we're obviously seeing a lot more moves from the monetary side, and we need to see more complementary things going on
from the fiscal side at this point. But looking at the data, obviously FDI didn't do as well. As foreign portfolio investment, but we have FPI, you know, at this point. So talk to me about what we can actually do with what we have, even though it's hot money.
Hot money. I mean, hot money, just like what it is easy to come in, also easy to go out, right? And that's one of the reasons why globally and domestic economists don't really advocate for us banking an economy's sustainability on hot money, simply because you notice most of this hot money actually goes into the stock market. Once they buy the stocks, and before you know it, it's all out, right? And they're more short term because foreign portfolio investors want money that they can want investments that they make, then they're able to get their money out, quickly. And until we're able to see this more, and what that basically just tells us is that while we're seeing this inflow of money coming in, it's still not sufficient, because what Nigeria needs, we need long-term fiscal sustainability. We need enough forex to come into the country so that we're not seeing this much swing in the naira. We also need enough forex to come in so we see the naira appreciate substantially towards the targets that these reforms have, put in place, and that's around 700, about 800 naira to $1, and we're still very far from that. See, the naira, even though it appreciated, we're seeing 1,500, 1,500, exactly, and that still goes a long way to affect businesses. So two things to mention here. Even though this is a good thing in terms of we're seeing money coming in, how much of this money is actually supporting the businesses that use naira and dollars as well to import and even export, right? So because this large inflow of FX that we're seeing at a particular point in time, because this is just a flow, it's not a stock, meaning that if it's not balanced, if it doesn't stop at some point, right? If it's not, for lack of better, I'll say stock. If it is not, if the stock is not stock,
right,
for that particular point in time, we won't be able to do so much with it, right? And by stock, I just mean money that we can use to, keep building up the economy, not money that comes in and in 3 months it's out. It's out, or money that comes in and in 6 months it's out. So that's one of the reasons why, even though this is a very good news, it's important that we don't take our eyes away from what is truly important, and that is long-term investments, long-term capital. Because the end goal here is not to just resuscitate the economy for a short time. We want the economy to live long. We want the economy to breathe well. Right. And for that to happen, we need long-term capital. We need productivity to be at its peak, right? And right now, that's not happening. And until we see that...
it's still going to be hot money.
Yeah, it's still going to be hot money.
All right, let's look at the PMI. We're seeing it drop to a 7-month low.
Yes.
Still above that 50%
yeah, 50
mark,
yeah.
But it's a big drop from about 52%.
Yes, it is. And that's the conversation about productivity I'm talking about, right? What this just tells, because PMI is broken down into five or six sub indices, right? We have output levels, we have new orders, employment, supplier delivery time, business confidence, right, and inventory. And when you look at the breakdown of all of those things, you realize that even though to some extent output levels have somewhat improved compared to maybe the beginning of the year, you see that demand is very low, and that is affecting businesses, right? Business confidence is also very low because we're still not seeing cohesive fiscal policy initiatives that will support businesses, right? So businesses are saying, okay, in the long term, even though I won't say I'm making so much profit now, but I would say even though things are looking a bit better now, how about the next 12 months? There's no stability. There's still so much uncertainty going on in the economy. How can I project for today up until the next 12 months or even the next 6 months? And you say a lot of businesses in Nigeria, particularly FMCGs, are very bearish. And that, again, disincentivizes the kind of long-term investments that we need to sustain the economy, right? Then when you also look at new orders, if people are not buying the stock that you've taken up today, how are you able to get new orders for the next time, right? Then you also look at supplier delivery time. That has substantially shortened over the past few years. Reason being logistics issues, an increase in transportation costs, increase in distribution expenses, right? And the longer all of these issues remain, supplier delivery time as well will remain low. And that also disincentivizes businesses. You find that even though some businesses are actually finding ways to work together to collaborate to ensure that they're able to mitigate some of these issues, they're still struggling substantially. And remember that the kind of businesses that this PMI tracks are primarily small private sector businesses that have been hard hit by the Naira, depreciation or the Naira swings, high interest rates and all of that. So again, to some extent, I do think that this decline would probably remain for like the short term.
Right.
And this also is a pointer to what our GDP growth would look like for the next quarter.
Right.
PMI is a forward-looking indicator to GDP growth. An example would be if you see substantial increase or substantial expansion in the PMI numbers for I would say the first quarter of the year, it kind of gives us a pointer that okay, GDP growth might come in high. And remember, our GDP grew about 2.98%. For a developing economy, that's substantially low. And when you look at the average of GDP growth over the past 5 years, you see that's an average of about 2% for an economy that's supposed to be, the giant of Africa and supposed to be producing a lot more.
So much
right?
impact there.
Yes.
Definitely. But yeah, it's still above 50 point mark.
Yeah.
Hopefully we get
somewhere. Yes.
Thank you so much, Dumbi Oluwole. Always great having your perspective.
Thank you so much for having me.
All right, now, so let's just have a view of what played out in the market yesterday. It was a marginal loss for the first trading day of July, and we see there 0.04%, but still above that 100,000 level. That's for the all-share index. Equity gap sits at 20. Down about 20 billion for yesterday's trade. Let's get a check on the trading activity. We see trading activity was somehow subdued, but it's all red for the counters we track. Banking, consumer goods, and insurance, all down for yesterday's trade. So it was definitely bearish. That's it from me on Business Morning. We'll give you a summary of the stock market close for today and details of the FX, market. Thank you for watching. I'm Ladi Williams. It's back to the Sunrise Daily.